All right. So for today, just a quick recap of what's been going on. We slowed up as we moved through the second half of October. Let me shut down this Trade the News audio here for a second. We've slowed down. We're waiting for headlines. Impeachment, while it's still out there, has been a little has been quiet. The phase one is baked in as far as the deal. First phase one deal with U.S. China. And so the trade wars have kind of been snuffed out. That's why you see the Dees contract over 3,000 traded 30.14 quarter today. And we're just grinding up. Volumes are light. So you got to be careful and you got to mute your expectations a little bit because some of the things that were driving us have taken a back seat. Like I said, the first phase has kind of been baked in as far as getting done. So the anticipation of what could be a surprise is if they don't, something falls apart with that phase one deal and we go back to the drawing board is where we were 2-3 weeks ago. Some shoe drops in this impeachment. I doubt that. And that's an outlier, but that's why they call it a surprise. And the FOMC, they meet in a couple weeks, or I think in about 10 days, October 30th. And let's take a real quick look at at where they're at lately as far as pricing in a quarter cut. Now you guys should have this screen, this link, I should say, bookmarked. 95% chance essentially they're going to do a quarter. That's what this means in here. So by October 30th, after the statement, after that 2-day meeting, rates are going to be between 150 and 175, which is a quarter point lower than we are now. Just a 5% chance that they're going to stick it at 175 too, even, or 2%, which is where we are right now. So again, 95% chance that that's crept up. We've talked about this as kind of like a perfect world for the stock market where economic numbers, while not super, the unemployment rate is low, and it's just bad enough to get the Fed to cut again. So this was 60-40 that they were going to do nothing 3 weeks ago, if you remember. And all of a sudden, a bad ISM number, and it slowly but surely went up to 95% and a phase one deal with China. So the market's kind of getting the best of both worlds, and that's why you see where it's at. So keep an eye on this link. If you don't have this link, tell me, and I'll pop it in here. I'll pop it in here anyways. You should bookmark this link and check it from time to time and be able to gauge where the Fed is. For the next meeting, that's this tab, December 11th, there's actually a 68% chance that they keep it at 150, 175, because remember, that's what it will be after October 30th, and there's a 28% chance that they cut it another quarter. This obviously is going to change a lot more after we get the quarter cut on October 30th and after we listen to the statement and what these guys talked about. This is obviously going to change a lot. So let's get rid of that and go back to what we're going to do for this meeting. A couple things within the next week or so. I'm trying to think of a good time to give people the best opportunity to come live. Might be at night. Probably not next week, but the week after. Ken from Daniels Trading is going to come on, Vice President of Sales. Nothing to do with brokerage, everything to do with his experience, 25 years in the business, seeing a lot of traders come and go, and not just customer traders, but people around that brokerage. But he's a motivational guy, motivational speaker. He actually will go out and talk to different companies as Tony Robbins-esque, only obviously not that kind of name and not, with a weekend visit, but just a talk because he makes sense. I've become friends with the guy. It's not just someone I know of. I know him really well. And I think you guys are really going to like what he has to say because there could be a lot of action that comes out of it. Now, what's interesting is that it all came together without purpose with these success sheets, right? I didn't prepare to do these success lists that so many people have sent me in, prelude for his talk. It's just worked out really cool and worked out that way. So it's a really nice kind of step one, step two as we work into what he's going to talk about. Now I'm bringing this up because not only is just going to happen within the next couple of weeks. But I spoke with him last night, met with him last night, and went over the presentation, the slide presentation he created. And I was really impressed. I mean, essentially, we walked through it, and I liked it. Meaning, I was, looking forward to what he's gonna kind of fill in the blanks and do the presentation. So it was much more than I expected, and I expected a lot. So I think that without overbuilding it, I think you guys will like it and really create a perspective that you may or may not have thought, and then some action coming out the other end. Now, last week, if you watched or listened to the recording, you probably in the beginning heard me get mad, and I have no reason. I should have got more mad. And it wasn't at anyone in particular, it was at everyone collectively, or anyone who didn't do what I had asked them to do. And some didn't attend the meeting, and that's fine. Um, you just had to, if you're serious about doing it, it doesn't take long to do it. And it's, I think, as we've gone through it, absolutely imperative that if you're good, bad at a certain skill, or even know it exists. Think about that for a second. There's so many people that don't even know there's a skill that they need to understand in order to be given any chance to be successful at trading. It's like trying to be a carpenter. I didn't know cutting wood was part of being a good carpenter, or part of being a carpenter. Didn't realize that was important. You don't know what you don't know, and so the internet's just not going to give you all the right skill sets and categories of what to understand. You're going to be inundated and overwhelmed with all kinds of different um, marketing paths that you're going to be sent on. And it's not your fault when you get sent on them, because, like I keep saying, you don't know what you don't know. I was fortunate to kind of be walked into a professional venue of traders as a trading floor guy, or on a floor as a ARB clerk. That was the venue of professional traders. And then after that, a prop firm. Whereas 99% of the people who start today have no idea what a prop firm is, nor will they ever recreate that environment. Now, let me put some drawings up here. The success sheet, just to recap, is a category whether or not you think you're competent, maybe you're getting better, maybe you're bad at it. I'm just using first letter of the words. But it doesn't have to be micromanaged. I didn't want to create an exact template for you guys to fill in. What do you think the categories were? If you were competent, if you were getting better, if you were bad, 1, 2, or 3 of those that you could check off. All right. Then you could work it and say, well, what order should I understand this? Now, some of you guys are obviously, you've been doing this a while. You didn't start. So what kind of steps do you think that you're on? Did you skip a couple steps in here on your journey, and now you're trying to get good here? Could you go back to one of these 2 steps to get better at understanding how you're going to get better at order flow, right? You're trying to learn order flow, and you're trying to learn delta, and you're trying to understand the dome, and yet you weren't exposed to some exercises that would make it easier to understand. Like I was talking with Ken yesterday, and it just come up. I go, it just hit me so many times, but sometimes it hits me really hard how someone could take this, we call this a dome, right? We never call it a dome in the beginning. We just call it a front end. You take a dome with all these numbers on it, right? And then you get software like Jigsaw, which isn't bad, and it's got all these extra numbers on it, right? All these other stuff. And people want to jump, whether it's Jigsaw or just a dome, at learning order flow or learning stuff before they learn how to point and click, buy and sell, bids and offers, limits, markets. They don't even know how to use the tool, and they're trying to learn everything that dresses it up. They have no idea what the numbers truly stand for. And yet they're trying to learn the psychology of trading, or order flow, or Fibonacci, or whatever it is, market profile. They're awesome at market profile, but they suck at putting orders in the book. How insane is that? And it's not just because you could eliminate mechanical errors. You bought it when you meant to sell it. You left an order in the book, not just because you could eliminate those or minimize those, but it's important to understand how it works. And if you can't use it correctly, you don't know how it works. So why bother going into the theory, which is what market and volume profile is, the theory of auction market process, if you don't know at its very core what these numbers and everything mean. And so you'd be damn sure that you go in and you learn, and it's in the first lesson in course number 4, lessons or exercises to how to use these tools. Here's what the tools are. You got to be told this is a dome, this is a chart, this is a candlestick, this is a time, this is price, and those things. That's what this does. It marks time and price. And this is a chart, and that's how that works. This is a price scale. It's a time scale. Okay, good. When we take it across, this is what time and what price it charted at, and candlestick and all that crap. But at some point, say, well, here's the tool. Here's how you use it. You got to plug it in. And I'm not being condescending. I'm being truthful. You got to plug it in. You got a safety, or you got to be careful. Don't put your fingers here. Don't put your hands there. Don't wave this around. This is what it does. The blade faces this way for a reason. All that stuff. You get it. And those tools are easier to use than a dome is easier to use. So everything is overwhelming when you don't understand it. All right. Everything moves fast. When it moves fast, it's not because it's fast, it's because you don't understand it. So the next time you say a market moves too fast or something happens, it's because you didn't understand it. Just like in language, I don't understand Spanish. They're not talking fast. It just seems fast because I don't understand it. So this week, because I thought last week was really good, I want to go over some of the success sheets or SWOT sheets, whatever you want to call them, that were sent to me over the last week. And I want to go over the first one because I think that it could be condensed, and I think people could have this as a problem with theirs. Some people, where you got too many things, you're overwhelmed with too many damn things that you're trying to learn and understand. And I think at some point we could come out with a master success sheet where it's not the exact one everybody has to work on, but all the ones in this master list should be on yours. Now, there are some wrong skills that people could have in their sheets or on their sheets. It could be a skill that you don't need to understand in order to be a good trader. All right. You don't have to understand amperage and how to tie in a breaker if you're a carpenter. You just don't have to know that. Some might, but you don't have to, right? Same thing with traders. A lot of things people think that they need to understand, and they spend a lot of time and waste time understanding it. All right. Now let's get into some of the how to condense this particular sheet, which I think is good, and I'm going to bring it down. But I think it is too detailed, and I shared this one last week, but I want to go through how it should and can be shortened. Number one, and this wasn't done necessarily in any order, but make sure that order flow isn't one of the first things that you're trying to learn. Make sure there's some other things that you have down before you get into this. All right. The problem I have with the list underneath order flow is that it's there's too many, right? It's just you begin to conflate. This guy begin to conflate, order flow speed. Well, those are edge zones, disappearing edge zones. I don't think that that should take a long time to understand. And I think it could be under another title. I think it just could be under edge zones, understanding how edge zones are marking how the tempo is changed and goes from slow to fast, right? That's what edge zones are. Icebergs are fine. You should understand icebergs and how that creates absorption. All right. I think that when you go down, he talks about delta. I think delta should be part of order flow. All right. Now, the reason why I get into this how buying can't move the market up. And then you go down identifying, pulling, replacing orders and how to use that info. None of that matters unless you could quote an order book and put in orders really quick and take them out really fast when someone's telling you to do it. Unless you're good at those exercises, why bother worrying about identifying and replacing orders and what that means? If you can't follow it, you're not going to be able to trade it. And then there's a lot of noise that it might just be irrelevant. You know, sometimes pulling orders and replacing them and creating icebergs are important, but you got to be able to follow the market in order to recognize certain things and to get that feel as to why and when they're important. So I think all of this could just be removed and get into the understanding how to quote a dome and the functionality of a dome. To me, would incorporate all this stuff. Now, I'm not telling this individual get rid of this, but you got to use the exercises to get better at it. Market correlations. When someone talks about market correlations, they probably got it from me because I'm one of the few people that talk about it in the whole business, right? So when you get into it, it's important to understand when you compare and contrast, you finally find what's strong, what's weak. So strength and weakness should be in market correlations, not just what markets are correlated and why, but how you're able to glean strength and weakness from one reason, because you're comparing them. Now, this is interesting how we got charting software and how people are, to me, trying to become experts in the software. If you want to be an expert in charting software, go work for the effing software company. Try to get a job with them and do support for them. Stop trying to be an expert in the software that you use, because then you're inclined to use every damn bell and whistle. I want you to be familiar. I don't want you to be great at it. If you want to be great at it, go get a job with the company and do support. All right. I don't agree with knowledge of its capability, knowledge of the capability of the tools you want to use. I don't, I think you should have, if you collaborate, you'll get to that point without doing it on your own. All right. And this guy, Ken, is going to come up with some really good, I don't know what you say, action plans, but reasons and power of collaborating that makes so many things efficient. I think a screen setup and a layout of charts, if you don't have your layout, you got to get a layout. You got to stick with it. The key about layouts is this. While you could tweak it, you shouldn't be effing with it all the time. All right. People who are always switching around their screens week to week are just overdoing it. I mean, I could see at the very beginning, you're trying to get, your screens laid out and everything, but at some point, leave them the hell alone. Get used to watching what you're looking. Remember, windshield, mirrors. And then look at indicators and I don't know if I agree or disagree with price pattern being an indicator. You can make an argument for that, but all this stuff is this individual strong at understanding price patterns, and I think you should be. Highs, lows. I mean, I think you should understand swing highs and lows, and you should be able to do it within 1 3-hour session of someone teaching you it, maybe 30-minute session of it. So I think that these are the delta stuff gets to be too deep into the woods. How about just delta? Understanding delta. You could get lost in too much delta analysis. You really can. And so you got to be careful. But to me, all of this big lots and everything else, that falls under order flow. That falls under, hey, you can't move the market when you're supposed to. Remember what I said? Stop looking for the right answer and start looking for the right question. We just had big buying come in. Why didn't we go up? That's the right question. Now, this is what I liked about this particular grid, because strategy. Now, this is going to be different than yours. This is going to be unique to the person who wrote this out, and he likes these, what he's referring to as a turn strategy. Okay. And he's also incorporated a trend strategy. Working with this guy, I said, wait a second, wait a second. You're trying to be everything. Just keep an eye on your turn. You want to catch 100% of everything the market gives you? Not going to happen. All right. Yeah, it needs more work. Just stick at what you're good at first. And until you've proved that you're good at it, then maybe look at a trading or a trending strategy. So don't get to be perfect. Again, a problem we all have. And when I say this, I'm not saying it as the guy that's perfect, I'm saying it that as a guy who's human, we all fall into the trap of trying to be perfect first. We want to start where the finish line is. You got to run, you got to start at the starting line. So don't worry about being perfect. Worrying about getting started. And everybody will worry about how to put up a success sheet, and they just put some pen to paper and get going. If you think you're weak at economic numbers and how you could pull all that together, then you do need more work. And it's important to put that in your list. Um, Discipline. I honestly think that this could be a real long list. It could be a real short list. None of it matters unless there's action that comes out of it. Like discipline is all about the psychology, right? Here, this accountability. I think this is like when I'm reviewing monthly, weekly, daily. How about you just get started reviewing daily and the weekly would take a lot shorter? I mean, I never had, let's review our week. Well, if you reviewed your days, you don't have to review the week. All right. Document trades with the verbal journal. Anybody that's not using that is not serious about um, documenting their thoughts, right? And trying to get a feel of what you were thinking. And what Ken's going to talk about is it's not you versus the market, it's you versus you. It's a, how are you supposed to, hey, you guys agree what Mike had said, Bellafiore, a few weeks ago about this is probably one of the few businesses or one of the best businesses to learn most about yourself, right? You're going to learn most about yourself in this business versus others. I think most people would agree to that. Well, so then dive into it. Don't avoid trying to learn about yourself. What people do is they avoid trying to learn about the negative elements of themselves. There's a lot of BS that people bring to this, to the table of life. Everybody in this room in here has a lot of good and positive qualities, but you guys got some negative qualities. So we're supposed to avoid it. Some of you guys, don't listen. It's just that simple. You don't listen. And so it's like, well, what am I going to do? Give you a timeout? Punish you? It ain't going to work. Am I gonna, go to bed before dinner? Am I going to take the Xbox away from? I don't know what would work. But if you don't listen, you don't listen. But everybody's got a lot of barriers that they got to lay down before they get over them. They got to file on those barriers. They got to know that they exist. Let's finish up with this one. I don't want to spend this much time on each one, but um, these are going to be unique again to the person. Risk management is important, but like I said, a lot of people have this up too high because they read a book and risk management's important. You got to understand risk before you manage it, right? And so you want to understand risk management after you start to understand a lot of the other stuff that most people don't. I think psychology, and I mentioned this last week, and I want to say it again, the psychology of the market doesn't mean you have to understand all of it, but you should start understanding a lot of it before you start trading. And if you already started trading and not learning a lot of it, is when you got to circle back, because you don't want to be surprised that you were capable of doing the stupid SHIT that you're doing. And I'll raise my hand. I did it today. I did something stupid. All right. So this is important environment, office setup that this guy has. I said this last week. If you're embarrassed to show someone your office, then clean it up. Do something simple. I don't know if these tools are good, analytics. I'm afraid when I read through this sheet, I'm afraid I'm dealing with someone who's trying to be too perfect. Just get better. You don't have to have the best analytical tools. and skills. You don't have to, what happens is you get into a situation where you try to be, you try to fix all the important things on the surface, and the veneer looks good, but underneath is crumbling and rusty. So it's only going to last so long. So don't make it all about aesthetics. Just get to working. Like verbal journal. When people say, I don't know how I'm going to use that. How about you just use it? Yeah, how you're going to use it. Just use the damn thing. All right, let's move on. Let me move that one to the side. Let's go on to the next one. I'm not going to mention anyone's name. Let's go on to this one. These are not, I did not share these last week. That first one I did, this one I haven't. Now, this one's interesting. I wish I remember who did this one. I won't say your name. I don't remember offhand. The I like the idea of offline skills. What are you doing that doesn't have to do directly with trading, but certainly affects trading, right? And it's how you eat, and it's how much you sleep, and different things like that. I think that knowing the difference between your best trades and is this, you obviously can't, even though this person listed this first, it doesn't mean that you have to have this skill first. You're not going to have this skill first. This has to be done in working with other people, because you have to know what your best trades are, because winning trades aren't your best trades. Sometimes your best trades are losers. So you got to be able to separate that and understand you need work. I like these comments too. You need work, but when? I've also told people you're working too hard. You're putting in too many hours. You're going to burn out. I've told people that. I don't know if it was this particular person. Now let's just read through these. I'm not going to give a comment on each one. Methodology, knowing how the combination of variables needs a set for a setup to be a setup. Recognizing high probability setups. Coming up with tactical trade opportunities. This person feels they're competent. That recognizing where price is being accepted. Interpreting relationships between price, time, and volume. Seeing and following higher time frame rotations. They need help. Reading cumulative delta. They're good at it. Reading the footprint. They need help. Ability to understand intermarket relationships. Why they became an edge member. Good reasons to become an edge member. Trading skills, execution, recognizing an impulse trade. Awesome. Already doing more mindfulness exercise to get better at this. I had an impulse trade today. Adding to a trade. Uh, if I'm in a good trade, I hate to mess with it and move up my average entry price, and that's hard to do. Make sure you ain't adding to a loser. Getting an excellent trade location. How do you do that? By incorporating these things from above. And he even says that if I could read order, who is this, by the way? Who wrote this one? If I could read order flow better, this will improve. My focus right now, going back to order flow. This is good the way it's broke down. And again, you guys can incorporate this into what you're doing, but there's no exact template that's going to work perfect for everyone. Nobody's taking ownership to this one. You should. It's a good one. Recognizing when the market conditions have changed. That sticks out with me, at me, because here's what's hard about that. You're already in a trade, right? So when you're managing a trade and you're supposed to recognize if market conditions change, that's going to be hard to do. Think about that. It's going to be hard. You're going to be resistant to wanting to see market conditions change from what you think. So that always takes a lot of work to be objective. You got to trick your mind like you're in a trade, like you took a winner that you missed, or that you're not in a trade when you are. Risk management, his size, his location, number of trades, all he feels he's competent with. It's uncomfortable being in an open position. Sometimes I just want to take an early profit and be out. I have to keep fighting that urge. At least you recognize it exists. All right, so this is good. Nobody has taken ownership of it. So we'll give it to Chris. Chris, nice work. All right, let's go to this one. I like the categories good, needs work, bad, notes. I think that you have another one that gets better. Who did this one? This one goes into methodology, breaks it down, market and volume profile, the timing of their entries and stops, logical targets, reviewing it, looking for new ideas, pattern recognition. Looking for new ideas is important to always find a better way to look at and see the same thing. All right. When you say you need work, part of your notes should be what you're doing to actually do that work. Understand how you get around charts, various tools, and studies. With Sierra, again, don't try to be an expert. Just know the shortcuts. All right. Because software is like an effing maze that you'll never, ever get through. And you don't need to. All you got to know is how to get out. I'm going to a pumpkin patch we go to every year tomorrow. The kids, it's like a tradition, and they got this stupid corn maze. I don't get lost in it. I know where I went, so I can get the hell out. If I get too deep in there, then what? Then I'm embarrassed. Then I'm lost, and I feel like a schmuck. So I know where I gotta know where you're gonna get out, just like a trade. So don't get too deep into software. And if you're that interested in software, go create your own or go work for Sierra. And I'm not saying that the person who made this feels that way at all. Just telling you, don't get trapped into going too far with that. Mindfulness, emotional intelligence, and focused and ready. Sometimes the mind wanders and not sure what they should be looking for. Good to be mindful of that. What sort of thoughts am I having and realize that they're not my thoughts? I think what Ken's going to talk about is going to really pull a lot of this together. Types of entries, understanding these patterns, and they're good at it. So there's no like, oh, I didn't see that pattern. So this is a good one. It's short, it's sweet, and all these need work columns have to be what? They have to be have an action plan next to them. Well, you got to be telling yourself you're working on them. All right, let me see this next one. Who did this one? If not, I'll give it to Chris. He'll take it, I'm sure. All right, let's go through it. Profile, a lot like the other one. They're they're bringing the profile, and if that's an advantage and a disadvantage, let's read why. Good at using profile, reading context as it pertains to profile. This is where I've spent most of my time. My ADD has helped me see things in different ways here than others. It has helped me see more creatively. Yeah, it's good. I like that. And I like that you admit that you got ADD. I knew there was something wrong with you. I'm just joking. I got a little bit of it too. So that's why I don't like reading your emails. Indicators, disadvantage. Well, there's nothing, that's an advantage not to use them, depending, because most people use too many. And again, indicators have a broad term. Some people use it and they really aren't talking about the indicators that have a negative connotation. But most indicators that people try to use that are red light, green light are bad. That's not the definition everyone uses. But the fact that you're not using a lot is actually, to me, a good thing. Order flow with cumulative delta. I don't really know how to use a footprint in Delta, but that's why you're here. That's why you're newer. That's right. That's the whole point of footprint is just a bunch of numbers until you start asking the right questions around them. So I think you'll turn the disadvantage check mark into an advantage. I like that when someone says they found their rhythm, that's a good way to put it in their style. Only taking one or two trades a day using 30-minute profiles. I think that's awesome. What you're trying to do by coming here is to find better location, better timing using order flow. That's all. And you're not going to find it in one video or two videos, but it will click. You will have better ways to execute these one or two trades a day. They're not here to change their style. That's what I tell you. You're not here to change your whole methodology. You're to improve it. Well, that's good too. Market correlations, not sure yet how ancillary markets jive together, but another reason why you probably joined. I like the VWAP also. In fact, I'm working with someone that just looks at the 5-bar look back on a VWAP instead of the day session or the whole session. Just take a look at a shorter time frame VWAP. Another advantage to collaboration. Psychology, learning and mentoring. It's an advantage because he's with some good people, it seems. I don't know much about this person, but they seem like they're Italian, so they can't be too bad. So these are people's schedules and journaling, and if you don't journal, that's why verbal journal makes it a lot easier to do it and efficient. Helping others, if you feel like you can help others, and most can, that's called teaching while you're learning while you're teaching. Now, when you say you need to go through the exercises, you got to set up the opportunity to go through the exercises. You got to make it, you got to make an appointment, right? It's like someone who says, I got to get to the dentist. It's all BS until you made the appointment. If you got to get to the dentist, stop what you're doing and make the appointment. It's okay not to want, this is good to go through because pre market analysis, pre and post, you don't have to use it. You don't have to have an opinion before and after the market, but you should go through what's driving the market. You don't have to be bullish or bearish, though, going in. He doesn't like IB. And it's important to have a broker you like with competitive commissions. They don't have to be the cheapest commissions, but the guy needs to get a hold of you and get back to you when you reach out to him. If you guys are interested, there's someone I've been talking to that I like. It's different than anybody from before. So if you're interested in talking to a broker, reach out to me. Charting. He likes South Carolina and he loves them. I mean, Sierra charts. You like Sierra charts, but not IB. You got to get away from IB. This is important to put down. This will drive you to move away from what sucks and what you don't like. And the reason why you don't, the reason why you think that for people that, well, why wouldn't you just change something you don't like? Because we're human. Because we're human. Common sense isn't common and we don't do what so you got to push yourself to move and say, why didn't I do this earlier? Because that's what you'll say when you finally make the switch. Trade the news or any news source. And I'm looking at another one, but yeah, you got to have something that keeps you in the market and keeps you from being naked. So this is a good one. And it was, I like the comments and the notes, and I think everybody should have those notes that try to drive you into some action. My throat's hurting right now, which means it's a good session when my throat hurts. One last thing. Bill, are you here? Stick around after class. I want to talk to you. You're not in trouble. Overnight. Who did this one? I don't like the colors. That doesn't mean it's bad. Just joking. Pre market. Let's read through this together. Let's hear what someone else has to say. Pre-market. Look for multi-swing highs and lows, volume and range. Find ice. Look at this guy. Do you guys hear this guy outside my window? Hold on a second. Let me yell at him. All right. I got a leaf blowing outside my window. I didn't yell at him, so don't get offended. All right. Overnight. Simple things he looks for, and I think that's great. What are the drivers? See, these are the right questions he's asking. All right. Working on his levels. A night, and I like the way you put this, warming up. Building a bias. Which side shows bigger stuck traders? Looking for sellers who cannot get it to go down or opposite. Looking for these edge trading group patterns, right? These transitional moments. Finding locations to put orders in the DOM or dome. All the questions that we talk about. Where are you on the map? What are the correlations doing? My orders get filled easy. I think that's an awesome question. How hard is it to fight for that spot? And then he's got in his final column, how good is he? I think that, and I like this, and I like that you're having the right questions you're asking on this sheet. I think the one thing will help with a lot of these things, action wise, will be what Ken's going to talk about in a couple weeks. All right, let's do one more. All right, this one I want to not share the comments though. Hold on a second. We'll go over the comments separately. All right, you guys could see that. General terms, like I talked about the terminology, you guys understand the industry speak, so that's not something that you have to worry about. But early on, wouldn't it been nicer to know what the proper words and phrases meant? I'm sure it would have, right? Trading skills, recognizing setups, what kind of indicators, pattern recognition, your predictive skills, correlations, looking at other stuff. Most people don't do that. That's a skill that you get better at. Again, the exercises make learning all this stuff easier. Having a source, that's a great way to start, right? When you're trying to understand the news, at least have a source that gives it to you. You have to know the direction. Not only knowing the direction, the reason why it's a weakness is because they don't know the direction as a diligent reaction. Pompeo gets fired right now or quits, like Mike had said a few weeks ago, bullish or bearish. You can't think about that. All right. You can't think if phase one falls through, China says they don't agree to something, bullish or bearish. If you have to think, you're not good. You're not good yet. Whatever kind of journaling you do, just do it. Just do something. Because if you don't journal, you can't review. And if you review by yourself, you're not reviewing as well as you should be. Try out new SC studies. Just be careful not to be juggling too much stuff. It's all got to fit under, when I say working for a new edge, it doesn't always just mean some sort of new feature in Sierra or in a what they have in their custom studies. It's got to go under the umbrella of order flow or market correlations. I like the way you have a broker. If they're not responsive and but their commissions are good, you got to make that decision. Why can't you have competitive commissions and a responsive broker? If you don't, you should. Missed trades, losing trades, all of this, I could see how this affects your psychology. I think what Ken talks about is going to really help with this psychology column. I think these are offline physical health effects, but are very direct in how it helps us clean mind. Hey, listen, do you like to get dressed and go out when you're in shape or when you're out of shape? And it's pretty clear, right? So if you look forward to getting dressed, putting on clothes, nice clothes, because you're in shape, then you're going to look forward to going out. And then you're probably going to have a better time. So it all matters. It all matters. But again, you know why a lot of people don't start working out? It's because they think of the finish line first. They think about, wow, if I got to lose that much weight, that's going to take a long time. And then they get bogged down. You're not supposed to look like you were when you were 22. You don't have to. Don't think about that. Just be better. Where did I leave off on? Now, price specs. If you don't understand the specifications, then we're in trouble. And then you should make sure that's a benefit or that's a check in the column of advantage. You just can't be like, I didn't know it was $25 or 31 quarter a tick. Well, then what'd you trade it for? Understand trading styles. It's what I talked about last week. The mechanics are the exercises. You know, your mechanical. Here's the thing about mechanics. The mechanics could be putting in orders, taking out orders, making sure you're aggressive, making sure you know when you're passive, understanding when you're fighting for a price and you can't get it, understanding that when it's slower, it's going to seem more like a fight, right? Because there's not a lot trading. When it's slower and there's less volume, there's less what? People stuck. There's less people at the party, period. So when there's less people at the party, it's not as noisy, it's not as loud, it's not as rambunctious, and that's the way the market is. If there's less volume, the range is tight, and you come into the day and you're looking for more, you're in trouble. If you're looking for a breakout, you got your ass kicked today on a day like today. And people watching this on recording, it's Tuesday, October 20. What is it? 22nd. Go back and look at that day. So far, it's just a grindy, slow day, and we had that anticipation coming. It's really important to say, hey, should we expect a big move? No, it seems like it's just going to grind and grind. And if you reach on a day that's slow, what happens when you reach? You're usually vulnerable. And on today, reaching would have been a problem. There's no question about it. What are drivers? What can be the biggest driver? Not only what is driving, but what could potentially be a big driver. You know, the Fed comes and goes based on what they're going to do with rates. Economic numbers could come and go, but what's the constant message? The US China trade deal, you should love that that's been around because it's created some uncertainty. So there's comments that are due to come out that are going to change the landscape. And there's a lot of times we don't know what those are going to be before they come out, but you can anticipate after they come out what's next. And because we haven't had anything really come down the wire, there's still opportunity. You just got to adjust to the fact that it's not volatile opportunity. People that put this down and think that it's not important at all to your success. To me, if you can't do what's easy, then how are you going to do what's hard? Think about it that way. If you can't have your desk cleaned off, how are you going to clean your head up? Right? How are you going to master yourself against these markets if you can't do some simple stuff? All right. Do the simple things well, then the harder things seem easier. And then you just have a better and better chance at doing this. The key is to turn over every stone in giving yourself a chance to do it. And know that bad days are supposed to happen. You just got to minimize it and know exactly why you did it and it wasn't random. I didn't have a particularly good day, and it was not the market's fault. I did was pretty much one trade I reached, and I wasn't supposed to. Think about if you just do what you're supposed to be doing, how better off are you? If you just did what you're supposed to do, are you better off? And even if it doesn't work, but you're doing what you're supposed to do, at least then you could objectively analyze that what you're doing sucks. That's called being consistent. Strategy in your technique sucks, but at least I know that because I'm executing what I'm supposed to do and staying out of all the bull BS. So these are great sheets. There's something that had I started my course today, I'd start with the appropriate sheet for everyone to have, kind of a master sheet, but then it's not going to be the same, nor should it be the same for everyone. But I would go over skills that they need to understand. Now, that's already in the course, right? And that's why when I laid out the course, when we went to this new website, it's laid out better. And why the exercises, after you learn the basic stuff in 1 and 2, and how everything kind of gets summarized in lesson number 3, and you can understand the tools and you understand the numbers, then you get into the exercises. And if you don't do the exercises, hey, it's not easy to do exercises. I get it. But then it's just a little harder to learn everything else. And what in life do you learn that doesn't have an exercise in order to help you learn it? And if you think demo is exercise, wrong. That's not an exercise to learn your strategy, or tuition is trading losses. No, the tuition is learning yourself. Demo is learning the tool, not the strategy. The only way to learn the strategy and how it's working, and the micro has been a godsend for this testing something, trying to get better at something. The micro has been a godsend because it allows you to learn yourself as much as the market. Demo trading doesn't allow you to learn about yourself. You know how we talk about it strips out the emotion? It does, and all that other stuff. But the best way to explain it that I've learned how to explain it is the reason why is it doesn't allow you to learn yourself, how you think, how you react. Because when you take an impulse trade, it doesn't feel like an impulse trade necessarily when you take it, does it? So you got to catch it ASAP. With these success sheets, where do we go from here with them? If that's a question you're thinking about, because you should. If you don't have one, that's your fault. You should have one and have it unique to you. I haven't really seen anyone that's come up with anything that is not a skill you should have. You know, like it's a waste of time. And I think that has a lot to do with everybody in here has been through the edge or been through some good education prior or after. And so everybody isn't on the wrong. There's nobody learning something that is like harmonics. And I don't, someone said something about harmonics. I don't know much about harmonics. All I'm telling you is nobody taught me harmonics. I don't even know what that is, but I never heard about it in either professional trading venue I came from, the floor or the prop firm. Um, but I think this is going to tie nicely into the other end of the motivational five. Forget what Ken's calling it. Five. Let me look it up real quick. Hang with me a second. I think you're going to like the title as well. I think it'll give you more clarity as what he's going to talk about. All right, hold on a second. I was going to have people type it in here, but you don't, we've got enough coverage with the people that emailed it to me. If you want to email me yours, do it. You don't have to email me yours to prove to me that you did it at all, because that's up to you doing it. But if you want me to take a look at it, I'm not going to, analyze it and give you a full workup on it. But I'm interested to see if there's something that sticks out. I'll mention it to you and I'll bring it up in a future meeting. Oh, shoot. I had it. All right. Hold on a second. I can't find it, but that's irrelevant. It's 5 steps to doing something. That's an interesting title, huh? 5 steps to doing something. All right, but it's going to be make sure when you see the email and get the notification about it that you guys try to do everything you can to make it live. So I think you really enjoy it, and I think it'll tie in nicely to these SWOT sheets and your strength, weaknesses, and all this other stuff that keeps you on pace. But make it a living spreadsheet, which means address it, check it off, read it. What are your notes? How are those updated? Always keeping track on how um, you're using that language to give you motivation to do something that you need work on. Just saying, I need work with this isn't enough. You're going to have to make the appointment, in other words. So make it a living, breathing document, not just something that you save, but print it out and have it out in front, make changes to it, then document, or then change it, but change it by saving the old one and move right along so you can see how you've progressed. But that's it for this week. We'll see you next week. I'll give you guys a time and a place for when Ken's going to talk. We'll probably meet regular Tuesday session because it's not going to be next week. Most likely the week after that, but early November at the latest. Bill, you still here? Stick around. Everybody else, we'll see you next week. If you want to email me the sheets, email them to me. That's great. I may or may not respond to it. If something sticks out, I'll respond to it. If you got something on there that's unnecessary, I'll tell you. If you got something on there that's really good, I'll tell you. If I don't reply to it, doesn't mean there's nothing good on there. It's that I'm only one person. Yeah, you, Bill. Everybody else, we'll see you tomorrow in the room or next week. Keep an eye on that FOMC as we move closer to the 30th.